Hey guys, it's Will here. I was going to go through the markets again. And if you've been watching my videos, you can check out the past when I started talking about the negative signs that I was seeing with the various indices. And so, like breaking down below the 50-day, the red volatility stops, and the downward momentum, which is price percent oscillator on this indicator here. And so just to show that I've been sort of mentioning my concerns for a while. We eventually broke below the 200. So what happens is, like, once it comes down here and it sort of flattens out and you start to see this momentum coming back up, then you have a whole bunch of resistance from people that have lost money and they want to get out if it gets back to a certain spot. So if you draw a trend line across these tops here, you can see how it hit that. It might hit a 200, near a 200, or a 20-day moving average or something like that, 21. But this this hit nicely right off the trend line. So you can get excited about this reversal here, but usually you want to see a higher low established and start to see an uptrend. So we had a chance here where we start to see another low spot, but it's higher up. And you can see momentum is increasing. But you've got the 200-day right there. So you can see how it hit off there a couple times, like this one green candle, then this red one. The wick went right up here and then back down. And now we're bouncing down. So this can be a failure point. Like, it tries to hit the 200 and, made a couple attempts basically here and failed. So now we have to see if it supports somewhere around here. So I'm using TC2000. You can draw lines. If you hold the shift button, you get the horizontal line like that. You can put an alert on there. If you right click on the line and say set alert, you could have it tell you if it's crossing that line if you wanted to know. If you want to get a free trial or $25 off purchase, you can check out the link in the description of the video below. I use I have the gold plan and use real-time US real-time data. So the other thing you might notice is that I'm in pre-market right now. So this is before the market opens. So the nice thing with this setup is that I can see the pre-market, and that'll change because the volume is lower. So you can't just predict what's going to happen necessarily from the pre-market. But yeah, you can see we came up twice and back down. So it's not, I don't think it's a great spot to be trying to trade, like in terms of swing trading and stuff like that. And this momentum looks like it's potentially going to cross down. I'll talk about longer charts as well, longer term weekly chart in a second, just to show you a little wider perspective. If we go to the S&P 500, same sort of thing. This one sort of bounced twice off the 50-day, and the 50 sloping downwards. We've got the red volatility stops, and we kind of broke down. It's got a bit of an up candle right now, but it is down in terms of the percentage from yesterday at this point in the morning. But there's a support point here, and you'd have to see if that establishes, if that supports there, and also if there's a new higher low established here. So we're getting down close to this low, but and it's got some work to do, obviously, to break through these resistances, the 50 and the 200. Dow Jones, similar situation, bounced twice off the 50, kind of in a downtrend here, and there is a lot of support multiple times at this point here. So we'll have to see if that supports. One thing I was going to mention as well is with the price percent oscillator, it's zero is kind of a line where, like, when you're above zero, you generally are in a stronger uptrend. So you can see here, this whole uptrend here, we are above zero quite a bit. And once you get down below zero here, like here, crossing the 50, it's not a great time. So even though you might have a turnaround, if you're down way down here, you can either look at it as a chance to get in and buy a dip, which I don't really like, but that is a low spot. The other option is to wait for it to cross over zero. So you can see that once you get over zero, you're generally up above the 50. And lastly, IWM. This one was in a long period of consolidation, had a bit of a breakout here and failed. You can see what happens. It starts to come back and it bounces off the 50, and then so that a lot of times if you're going to short, you wait for that failure at the 50 and then you can ride that one down. And we do have a bit of an uptrend here, but it's fairly far down. So if you want to get in on those ones when you get across of the price percent oscillator, you could do that, but you're in a weaker position and you can get a lot of failed attempts here. So it depends if you want to wait for it to get above the 50 and clear some of these resistances, but this is a chance. Sometimes people buy these dips when they're down, when you have the momentum quite far down. The Canadian market, which is the TSX, has been doing a lot better because of the oil and gas and stuff like that, gold and resources. But you can see that it's kind of bounced off this resistance spot, and it's right at that spot right now. So we'll have to see if it's going to break through there. But that can be a little bit of a tricky spot to buy right at that spot because of the failure potential. So like you can see here that you had higher lows, but it might have been a good spot, but then you break. So you don't know if it's going to break that spot. You could wait. But if you get in early, you could do a trade from here to here, but it's not a huge amount of gain for that. So what I wanted to mention was if you go to weekly up here, there's a little menu here, 10-minute chart. So I can go to early. If I want to day trade and get into 10-minute charts or even lower than that, I can do that with this drop down. I can pick 1 minute, if I want. But if we go to weekly, you can see we had a beautiful trend since the crash. And then you can see now declining momentum, and we've broken down below the 50 with red volatility stops. So if you're looking at a longer time frame, this is not a great spot to be getting in because you have this lower high right here. So sometimes it's good to pan out a bit to get a better perspective. And the S&P 500 is a similar situation. It's in a bit of a downtrend. It's sort of sitting at the 50 weekly, and it's got support here. So we'll have to see if it picks up from that support spot. Dow Jones, same thing. It's got some support right at the 50, but the red volatility stops and the downward momentum kind of make me nervous. And this one looks really bad. Like if you draw a line across the downtrend here, this one is, it's been picking up here a bit, but still in bad shape. And then the TSX actually looks decent in the sense that it's still in this uptrend with a green volatility stop, but it's right at this previous high. So it is a potential entry point. And this price percent oscillator hasn't quite crossed over again, but because of the oil and the resources for Canada, it's it is looking fairly strong. And that's the indices. You could either buy the indices or you can go down into sectors or even stocks. So we'll take a look just quickly because there's not a lot to choose from at this point with the markets being the way they are. But I have a scan that looks at the strongest sectors, and that is things that are above a volatility stop and above the 50-day moving average, and an upward a price percent oscillator above 0. So you can see how good this chart looks. XLE, this is energy. It might be a bit extended at this point. You can see when we're way up this high, that does tend to pull back. So that's the other tricky part, is getting in earlier and then potentially getting out. If you'd see this cross down below the red volatility stops, but you have a momentum that's just about crossing here. You've got some utilities here, or sorry, let's just go with the base metals, like obviously copper and stuff like that. And then you have, here's a COPEX here. This is a bit up and down, but you have the commodities is what I was going to try to get at. This really smooth uptrend here. So this way, my scan shows me just the ones. I don't have to look at everything. I can just scan it quickly because I have a scan that filters out stuff. So if you want to avoid looking at things that aren't going to be great to trade with, this would help. So like gold is potentially breaking through here. If we go to a weekly chart, you can see how we had this big downtrend and we're starting to poke out there. So that is one that you might want to take a look at. But of course, a lot of times it's happened over and over again. So it's a real up and down chart. You get disappointed quite a few times. You see how it peaks and comes back down. But with the inflation and the interest rates going up and that, this could start to continue to go up. But that is one as well. So what you can do is, if you click on some of these ETFs, like the XLE, let's say, you can click on this menu item that says Open Component Watch List. And then you can look at all the stocks inside that ETF, which is amazing. So we could look at Chevron. I mean, this has been incredible. In a nice uptrend. Apache. So Halliburton. If you want to look at the energy stocks, you can see where it crossed the 50, then you had this nice uptrend here. It is flattening and sort of crossing down right here. So we might be, it's generally, when you look at the trends, they don't last forever. Of course, they can go on longer than you expect, but at this point, you want to try to get in here at a break of a downtrend when it turns to green, volatility stops. And then, see here we had this little break of a downtrend, but it hit off the 50, so it didn't establish a higher low. So you see here, when it went up and then it pushed up, it kind of established that higher low right there, but it also broke through the 50. And at the same time, it breaks through the PPO, price percent oscillator momentum, at the 0 line. So try to figure out, how to get into those spots in the future instead of trying to get way up here. So I'm tempted, obviously with energy to get in, but because of the extension of this, it's probably not a great idea. But you never know, because these things can go on a lot longer than you think. I think that's all I want to say for today. So, it's a very volatile market right now and up and down, and doesn't make it a great place to swing trade. But there are a few things you can see like that in the commodities that were continuing to go in a nice uptrend through some of this volatility. But, at some point this swing will pull back before it maybe goes up again. So you never know if that's a good, you can still get in here and sort of use the volatility stops, these green ones, as your stop loss, or a previous low, like a recent low, if you wanted to. But you've already had this run here. So trying to get in after pullbacks is a nice idea. You can even get in on the trend line, like when you see this pulling back and starting to go up again. You get these various little pullbacks. That's kind of the ideal scenario. A little pullback to the trend. All right, well, don't forget, you can get TC2000 in the link in the description below, or you can get $25 off if you decide to purchase it as well. Talk to you guys later.